you for joining us today. First and foremost, I would like to welcome everyone to our webinar, and thank you for making time for us today. Today we'll be covering the Ohio and Illinois markets. In the interest of respecting everyone's time, we ask you to hold all your questions until after the webinar, where there will be a Q&A opportunity. Tonight our goal is to give a comprehensive overview of Navigate Business Solutions. Navigate's primary focus is to offer products and services that will help commercial customers reduce their operations costs. Our primary offerings are electricity, natural gas, and merchant services, or credit card processing. Before we get started, I'd like to pledge a commitment to you on behalf of my partners and me. We realize many of you support families. All of us have monthly bills to pay, and the last thing we want to do is waste your time and energies. We're committed to making available the best resources, ensuring you have access to competitive supplier pricing, plans, and compensation, and offering you technical and customer relationship support. And most importantly, ensuring commissions are on time and paid in full. With that said, all we ask in return is that if you decide to work with us, we expect an honest effort in your partnership as we look to build something truly special. When it comes to energy, we'll be highlighting electricity. Primarily, we'll talk about deregulation in Ohio and Illinois. We'll overview the different markets in Ohio, as well as explain the opportunity and value proposition to the end customer. Most importantly, we'll talk about why our consultants are different from the competition and discuss our competitive advantages. And finally, we'll introduce you to some of our retail energy supply partners in the market. First, there are different market footprints in each state outlined by the local distribution companies, or LDCs. LDCs are responsible for delivery, maintenance, and meter reading services and are regulated by the state government. In Ohio, we have AEP, the illuminating company, and First Energy, Dayton Power and Light, and Duke Energy. For Illinois, we have Commonwealth Edison in the north and Ameren Energy in the south. When electricity was fully regulated by the state governments, the LDCs were responsible for three phases: electricity generation, delivery of the power over their poles and wires, and meter reading and billing services. If there was a power outage or interruption in delivery service, it was the LDCs that were responsible for the maintenance and reconnection. After deregulation, the local utilities were no longer responsible for generating electricity. Instead, they bought the power from the open market. Because utilities must guarantee electricity supply for all customers, they make purchases as a socialized procurement program. The resulting default electricity supply programs are not always the most competitive. We represent the market's top-tier retail energy suppliers, or RESs. These suppliers compete for our clients' electricity supply business, leading to very competitive savings of 15% to 40%, if not more. The best part is the local utility, AEP, FES, Duke, DP&L, Commonwealth Edison, and Ameren, are still responsible for delivery, maintenance, meter reading, and billing. Remember, this is not about a change in service. It's just about paying less for the exact same service. All the utilities in Ohio are deregulated. Outside of some small cooperatives, the market is wide open. The Public Utility Commission of Ohio regulates the process, ensuring enrollments run smoothly and the customers are satisfied. The same can be said for Illinois, where the majority of the state participates in deregulation. The Illinois Commerce Commission, or ICC, oversees the process, ensuring the utilities, suppliers, and customers are all on the same page. So let's take a look at the wholesale electricity prices. It's truly a great opportunity. This graph of historical prices is our biggest selling tool, as it shows where the electricity prices have been and where they currently are. Back in 2008, energy prices across the board were at an all-time high. Oil was $175 to $180 per barrel. Natural gas was well over $1 per therm, and electricity prices were close to 10 cents per kilowatt hour. As you can see, the competitive market has trended downwards the past few years. Remember, customers currently receiving electricity supply from the LDC or who were contracted previously through alternative retail energy suppliers are currently paying prices in the high 6-cent range to mid 8-cent range per kilowatt hour. Through Navigate Business Solutions direct relationships with retail energy suppliers, we're seeing wholesale prices being contracted in the mid 5s to mid 6s with margin already included. We're able to save businesses money, protect the customer's bottom line, and still make a living. You will no doubt run into competition when dealing with your clients, but chances are they fall into one of two categories. Some will be multi-level marketers who make money off of membership fees and Ponzi-like compensation plans. There's no value to the end customer. Direct marketers can be competitive, but they are limited to one price and one plan. From an agent's perspective, there's very little control as margins are predetermined and the marketing company owns the rights of the customer. As a Navigate Business consultant, you'll have the opportunity to work with a fully licensed and bonded broker in all the deregulated energy markets. You'll have the flexibility to offer multiple plans and competitive pricing. You'll also have full control over how much margin you would like to add on to each deal. Most importantly, you'll own your own portfolio of clients. Here at Navigate Business Solutions, we're simply here to help you as consultants build and better manage your portfolios. The reason why we've been doing so well the past year is because of our strategic partnerships in each respective market. Navigate Business Solutions has direct relationships with the market's top-tier retail energy suppliers. So in Ohio, you have such name brands as American Electric Power, Champion Energy, DP&L, and First Energy Services. In Illinois, we represent Nordic Energy, Energy Me, and Direct Energy. Our consultants are able to represent competitive pricing from a stable of brand name suppliers that customers have come to recognize and trust. So we have and will continue to build a competitive electricity program. We have built a very strong merchant services program that gives us another tool in our sales bag, allowing us to sell more. Another broker, you'll be able to offer additional savings with our merchant services. Merchant services is also very lucrative and ensures financial stability long term. We'll quickly overview the primary parties in the credit card processing value chain and talk about how they are all related. We'll discuss where there are opportunities to help the business owner save money and generate revenues for us. When it comes to processing credit cards, there are 5 main parties. You have the card schemes in Visa, MasterCard, Discover, and American Express. You have the banks that issue the cards, like Bank of America, Chase, Wells Fargo, or your local community bank. You have the cardholders, like you and me, that use the cards to make purchases. You have credit card processors that carry the risk of ensuring money changes hands between the banks and the merchants. And finally, you have our clients, the merchants themselves. Processing credit cards and debit cards is pretty straightforward. A merchant will swipe credit and debit cards for a full business day from customers making purchases. At the end of the day, the merchant files or batches the report for all the transactions and sends the report to our processor, Elevon. Elevon funds the merchant for the settled transaction the next day and then presents that transaction to the card scheme, again, Visa, MasterCard, or Discover, for funding. The issuing bank, in turn, funds the card scheme. Every time money is transacted, there's an element of risk that the merchant pays for. Because of our large portfolio of clients, we have been able to negotiate the reduced fees and rates, allowing us to compete with any credit card processing deal out there, guaranteeing merchant saves money and ensuring that we make money on the deal as well. The beauty of our business is the ease and transparency of the process. Whether it's an electricity, natural gas, merchant services opportunity, the process from open to close is the same. First, you're collecting an invoice from the client to analyze and submit for our pricing to our pricing desk. Once pricing is back, you'll be responsible for adding your margin and populating templated proposals. Assuming the client likes to save money, you're going to ensure that paperwork is filled out properly and neatly, and then submitted to our operations desk for processing. Once the deal is confirmed, operations will send out a deal confirmation from either the supplier or processor for your records. It's just that easy. Before we conclude, let's talk about a real case study. Understanding that some of these terms may be foreign to you, the concept should be pretty easy. So let's say we have a client, for example, Gino's Pizzeria, that our lead consultant has brought in. Gino's Pizzeria uses about 300,000 kilowatt hours per year, and they're currently paying 0.08650 per kilowatt hour, or a little bit over 8.6 cents. Our lead consultant collected Gino's bills and submitted them to our operations desk for pricing. Operations, in turn, contacted all of our suppliers, and the top energy supplier, or the retail energy supplier, RES, returned a transfer price of 0.04950, or 4.95 cents per kilowatt hour. If you look at box A in gold, the transfer price of 4.950 plus 0.006 mils, or 6 mils margin, resulted in a contract price of 0.05550 per kilowatt hour. Remember, Gino was used to paying 0.08650 per kilowatt hour. His new price will be 0.05550 per kilowatt hour, leaving a difference of 0.03100, or 3.1 cents per kilowatt hour. To figure out how much we've saved Gino, the lead consultant will take Gino's annual usage of 300,000 kilowatt hours a year, multiply it by 0.031, or 3.1 pennies, the difference in his rates, and Gino is saving $9,300 a year. Considering Gino uses about $3,000 to $3,500 in electricity every month, we're saving Gino roughly 25 to 30% on his energy bills. What does this mean to you as the lead consultant? If you're just starting with us, you're making 30% of the gross revenue. To calculate gross revenue, you're taking the same 300,000 kilowatt hours, Gino's annual usage, multiplied by the margin, 0.0600 per kilowatt hour, or 6 mils, and the total revenue equals $1,800. At 30%, the lead agent's total commission is roughly $540. When we first started in energy and natural gas about 8.5, 9 years ago, that $540 would have been paid out over the course of 12 months as a monthly residual. Because of the volume of business and because of the weight of our portfolio, we've been able to negotiate what's called a one-year upfront payment, meaning that you as a lead consultant will be paid that $540 upfront the next month. When it comes to calculating merchant services savings, it's as easy and as straightforward. So for Gino's Pizza, we're able to save them an additional $226 per month, or roughly $2,700 per year, simply by reducing his rates and pennies per card swipe fees over the course of his entire month. The best part is, just like energy and natural gas, Gino's services don't change. His hardware stays the same. His bank stays the same. All he's doing is paying less per each transaction. Meanwhile, the lead agent will make roughly $60 per month. Not bad. After the enrollments are confirmed, the total commissions for the lead agent is roughly $618 for the initial month, with an additional $60 per month for merchant services and another $16 to $20 a month for natural gas. Being able to offer all three products allows you to earn immediate cash flow by building long-term residuals, and it's truly best of both worlds, as we're saving the customer money, retaining a good client, and we're also able to make money. Perhaps the most important part is our back-end processes. We use a customized version of Salesforce.com to help us track, report, and issue commissions. We're able to track your pipeline and ensure on-time pricing while also accurately reporting. We are interested in paying commissions in full and on time, and most importantly, it's going to help us engage in email marketing campaigns on your behalf that's going to generate referrals as well as renewal business. With that said, that concludes today's Navigate Business Solutions overview and orientation. If you have any questions, please feel free to contact me, Mark Nakayama, at my phone number or by email. We look forward to working with you, and thank you once again for joining us.